Greetings. Welcome to my weekend market recap, 8th April 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live stock and market analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading. All the Q components run on the Metastock platform and the technical analysis component runs on TradeStation as well. These systems help me to anticipate a move and also tells me when not to take trades, like in the long direction that I did in the market recap of the past week. If you remember, at the end of the previous Friday, not this Friday, the one before that, almost everybody I knew of, they were bullish and they were basing their decisions based on how strongly the Friday's candle closed, how strongly probably the week also closed. But the Q systems running on Metastock or TradeStation, they help me not only to see where market is today, but what it is more likely to do next. And one aspect of that is that if the market, that is the majority or many of the market ETFs, if they are near resistance levels or at overbought levels, I avoid taking long trades. So if you observed my posts on my website or on my Twitter page, you would notice that I did not share many long trades, if any. In fact, if I remember correctly, only one long trade I shared, that was on Tesla, that was using a real-time breakout come gap setup. That was probably the last recent long idea that I shared. But most other ideas I shared were either on the short side or explaining why I am not buying something. That conclusion about the market may be true this week also. We'll look at that, and if that is so, instead of looking for long trade ideas, I may again look back on some of the posts I shared earlier and review how they played out eventually. We'll look at those posts, but let's start with a look at the global markets, starting with Australian index all ordinaries. Here we have a live example of what I just explained. If an instrument is looking overbought and all ordinaries is looking overbought because it is stretched to the upside for 6 days already, and while it is stretched to the upside, one day earlier it displayed a it displayed a bearish indecision at the top, and on the last trading day the traffic light that shows momentum of the instrument, the candle color changed from bullish to neutral. That is a live example of where I would not like to buy. I would have started buying at the lower edge after it made a swing low and started to go up with a change in momentum color to bullish. I don't like to buy at a swing high when the market or the instrument is already overbought. That is the conclusion from all ordinaries. What is the trend? If I ask myself, that answer is very clear. It is moving sideways, not uptrending, not downtrending, moving sideways. The range is created by trendline resistance and support. And where is it in the range? It is right in the middle of the range. That is a no trading area. That will be another reason, other than the fact that it is overbought for 6 days in a row. Right in the middle of the sideways range will be another reason of not taking any trade. What about Japan's Topix index? Once again, what is the direction? It is moving sideways, the range created by, once again, the trend line resistance and support, and it is right in the middle of the range. No trading area. So indecisive directional preference. I am not going to consider any trade in the Japanese market. What about CSI 300 of China? Interestingly, this is also inside a range, a triangle pattern created by trendline support and resistance, and it is not in the middle of the range, it is little bit more to the upper edge of the range. It has already gone up for quite a number of days, overbought for 4 days, so I'm not going to buy now. If you look back, where did we have the possible buying condition? That was on this bullish flow candle, at which point it went up from the previous swing low, made a shallow pullback, and went up again, creating a higher low with bullish flow. That would be the point to look for buying candidates. And you may also notice that on that candle, price went above the yellow direction line as well as 3 more direction lines. Other than the white, all the 4 direction lines were regained by price. That would be another reason. The fanning out of price would be another reason to consider buying right on this candle, but not now. Right now it is overbought. What is my preference? My preference is for CSI 300 to go up little bit more, hit the trend line resistance and till down from there. Why is that my preference? Because that will give me the lower risk trade direction on the bearish side. On the other hand, if it breaks out of the trend line resistance, it will have a breakout that is bullish. However, that will not give me a low risk buy point. That's why for trading purposes, I will like it to till down from the trend line resistance. Right now, moving sideways, no preferred trading direction. 3 out of 3 global markets we saw so far does not have any preferred trading direction. What about India's Nifty 50? More of the same analysis. Inside a range created by this memory trendline resistance and support, and it is right in the middle of the range, overbought already for 4 days, so I'm not going to buy in Indian market. Sideways moving and in the middle of the range, that is yet another reason not to buy in the Indian market. Now in Indian market, there is a lot of weightage on financial stocks, and there are reports of banking sector not being so strong in the USA, and it may be so in global markets also. So let's look at the Nifty Bank Index. Indian market to get an idea of what the market could possibly do. And here we see Nifty Bank is also inside a range, and it is right at the top of the range. It stopped right at the trendline resistance for 2 days in a row, could not break out of the trendline resistance, and importantly, it displayed two bearish indecisions in a row. As I mentioned in the master classes, these are detailed videos explaining all aspects of Q systems available from the learning page on my website open to the public. I explained in those master classes that one indecision is important, and if two or more of them come together in a cluster, we take more note of that. So what is the note I am taking? That it may go down. Will it go down? I don't know. But if it goes down, I will like that for trading purposes, because that will give me very low risk shorting opportunities. Will I like to short Bank Nifty? It's possible, but my preference is to drill down into the Bank Nifty index using Q index software, find the weaker fundamental stocks and see if any of those weaker fundamental stocks are giving low risk short setup. I would like to short those stocks if I see Bank Nifty is reversing down from the trendline resistance. And again, Bank Nifty has a considerable weightage on Nifty itself and on the whole market in India. So seeing that in this formation, trendline resistance and cluster of bearish indecisions is yet another reason of not buying stocks in the Indian market right now. Though I am looking at global markets, the exact same analysis can be applied to USA market as well, and vice versa. The last of the global markets that we study is UK's FTSE index. That is also inside a range, a narrower triangle pattern for the immediate price move and wider triangle pattern if we look back. Again, it is little bit more to the upper edge of the range, but there is no buying opportunity or shorting opportunity right now. Interestingly, I'm doing this live, did not look at the indices earlier. We see that all the major global markets are moving in a range, and none of them are allowing us to have a preferred trading direction yet. What about the USA market? In the last market recap, I said my preference was to stand aside. Let's continue with the USA market now, starting with market external view, market ETFs, SPY first. And I was using Q Global running on Metastock. For looking at the USA market, let me switch to Q Elite running on TradeStation. Both are very robust platforms for technical analysis. And I use TradeStation as a brokerage that helps me to analyze technicals on the TradeStation platform and place my trades also on the same platform. Let's look at SPY first. Now let's look back. I always like to look back to see how the Q analysis is doing in the future going forward. So last weekend we had a very bullish weekly candle. Last Friday closed with a very bullish daily candle as well. That's why most people, if not all that I know of, they were bullish. However, Q systems has this very reliable auto smart trend line resistance and support, And my approach is, if trend line resistance is near the closing price, I am not going to buy. That was one reason in the last market recap I said I was not going to buy SPY. And this week closed with a very indecisive doji like candle. Price did not go anywhere. It was a 4 trading days week. Friday was a market holiday because of Good Friday. My conclusion is remaining the same as in the previous week. It is too close to the trend line resistance in both daily and weekly to take any long trade. And now if you look at the jump thrust indicators, which shows if the price is getting extended, and this is getting extended with so much intensity that the up move may not continue. Very powerful pair of indicators to tell us when it is getting late to buy. So jump thrust is also telling us it is getting close to the situation where I would not like to buy. I would like to protect profit in existing long positions. SPY is telling us not to buy. What about QQQ? Once again, last week closed very bullishly. QQQ was the strongest of the market ETFs, but this week it has a bearish indecision at the top candle. Price is too close to the upper boundary also in daily. So looking at that, I would not like to buy. It is getting extended, and the jump thrust is also showing us that it is hitting the extreme levels where I would not like to buy for the time being. DIA, trendline resistance is there in both weekly daily, not very far from current price. Price has already recovered considerably from the recent swing low, and it is overbought for 6 days in a row. That is too overbought to buy. None of them are looking bearish, but they are either too close to resistance trend lines or overbought in terms of stretch indicator to buy. And IWM is different. IWM is bearish in color in both weekly and daily. That is also clearly telling us not to buy. It is in a downtrend. So if we look at the market external view through the ETFs, you could carry out the same analysis using futures also, or indexes if you wanted to. I think the conclusion would be same, not to buy, the same conclusion as I had in the previous week. Let's look at the market internal health check to see if that is telling us something different. US market breadth total view, everything on this chart is about market internal health check. Nothing is about one instrument, everything is about how the market is doing internally. First, if we look at the percentage of stocks above 50-day moving average, that hit the oversold condition here, and since then it is continuing to go up with higher high, higher low. That is continuing. It is still below the mid level, 50% level, but the up move is continuing. Is nowhere near the overbought level, recovering from oversold level here. 3-month new high low hit the oversold level here, and since then it is gradually going up. It is in the upper half, that is bullish, but not high enough to be overbought. So we have upper momentum continuing in terms of internal health check, bullish momentum continuing, not overbought yet. What kind of stocks are doing better? If we look at growth versus value, I mentioned in the previous recap that was flattening out, that I observed and shared in the previous recap itself. That is continuing, it is flattening out. So I have no preference in terms of growth versus value. Anyone would be okay to look for long or short, but I don't have any preferred trading direction. So anyway, I'll stand aside. But if I had a preferred trading direction, I would be ambivalent to growth versus value. Small cap versus large cap, that decision is clear. That is matching with the external view we saw from IWM. Small cap is doing very poorly relative to large cap. So avoiding small cap for buying will be the right approach. And if you are shorting, choosing small cap will be the higher probability approach. Nothing in this chart is saying market is overbought, but the external view is saying that it is not time to buy. What about the market? I'm still looking at the market. Market in terms of sector, industry, stock breadth, and sector performance. There you will find something interesting. What I mean interesting, that's a heavily used word. That will be probably actionable. That will help us making some trading decisions. Let's first look at the sector, industry, stock, advanced decline breadth from 1 month to 1 day. The 1 month picture is bearish, that is longer term. 10-day is also longer term, that turned bullish. So in this period from 1 month to 10-day, from bearish it turned bullish. However, this week you can say it is neutral, that is the medium term. And the short term is flip-flopping. Today is little bit bullish or neutral, you may say, depending on whether you are looking at sectors, industry, stocks. Sorry, so I should rephrase it. Today period is little bit bearish. There are more red colors. 1 day period is neutral, you may say. So at the close of Friday, we don't have any clear idea of what to do. In the longer term period, we can see that from 1 month to 10 days it improved, but then it weakened. Let me use the red color. From 10-day to 5-day it weakened, and from 5-day to 2-day to 1 day we may say it is remaining the same, indecisive. Actually Friday was a trading holiday, so from 5-day to 2-day to 1 day should be the right way of putting it. Until Thursday, that indecisive nature is continuing. That is actionable, meaning that that is also telling us not to make any trading decision right now. And I said something interesting is there in the sector performance. Let's look at that. One-month period is bearish. Over 10 days, it turned very bullish. All sectors, 11 sectors were up. But notice what happened after that. 5-day period is neutral, 6 up, 5 down. 2-day period, neutral, 5 up, 6 down. 1-day period, neutral, 5 up, 6 down. Now, what is also to be noticed is what are the sectors that were down on the last trading day. Those will be the red bars to the downside. Energy was down. Consumer discretionary was down. Information technology was down. Industrials was down. Materials was down. These are the sectors that typically propel the market higher. They are non-defensive. 5 of the non-defensive sectors, materials, infotech, industrials, energy, they were down on Friday, Thursday actually, the last trading day of the week. That's not a positive sign for the market. Only one non-defensive sector, financials, was up. That may be because financials were beaten down a lot. The other sectors that were up on Thursday, last trading day, they were healthcare, defensive sector, real estate, defensive sector, utilities, defensive sector, communications can be considered a defensive sector. This is what I found interesting. That external view of the market in terms of market ETF is telling us not to buy, and the sector performance over one day, and in fact if you look at today period also, consumer discretionary down, energy down, industrials down, infotech down, materials down. The same non-defensive 5 sectors are down both over one day, 2 day periods in the short term. That is not showing a bullish picture of the market. That may be a sign to get ready to short. Again, in terms of market external view and internal health check, there is no bearish signal yet, but see how the sector performance, especially the non-defensive sectors being down over 1 and 2 day periods, they are giving us some alerts, and that is also one way that Q systems help me to anticipate what is going to happen. I don't just trade based on what is happening today in terms of market movement. I drill down into different perspectives, and that help me anticipate a move and get ready with some stocks. So I might get ready with some, for example, consumer discretionary stocks for shorting, or infotech stocks for shorting, or industrial stocks for shorting. That is how I can anticipate a move and get ready. Now, if I look at the bucket analysis that shows the percentage distribution of stocks across their respective Bollinger Bands, that is bullish. Most of the larger bars are on the right side of the midpoint, and we can also see 58% of stocks are above mid Bollinger Band. That is bullish, and it is not overbought, because percentage of stocks above upper Bollinger Band in the uppermost bucket greater than 10 is nowhere near 30-40%. It is just at 6%. So that is bullish and not overbought. It is conforming with the external view and internal view. But still we are not able to buy because of the resistances and overbought conditions in the market ETFs. Now, will I see something interesting from the technical breadth in QFinder? Technical breadth is very important for traders, because we only make money buying stocks or shorting stocks if the stocks move in our direction. And instead of just looking at individual stocks technicals, it is helpful to look at the overall technical breadth that is visually displayed by QFinder. Let's first look at the weekly picture. And instantly we know that we have bearish signals more than bullish signals in the weekly interval. Strength signals are more bullish. That is because of large percentage of gap ups, but the large bullish strength is followed by large bearish reversal. Taken together, that can be bearish provided the absolute number of reversals is comparable to the absolute number of strength, bearish versus bullish, and that is true. So taken together, a bullish strength followed by bearish reversal is actually bearish. It's kind of false upside breakout in one way of saying, but not in terms of one stock, but aggregate of stocks, thousands of stocks in this case. And trend continuation signals are also bearish overall. That is not the only bearish observation from this chart. We also look at the percentage of weekly bearish headwinds. Whenever it hits a threshold of 1%, we know that that is another bearish signal, and that is true this week. It is flashing the warning signal. The percentage of bearish headwinds has hit the threshold. So we have multiple bearish signals in the weekly interval. That is telling us that though market is bullish, in some ways it is not the time to buy. How about the last trading day, Thursday? That is slightly more bullish than bearish. In fact, that is bullish than bearish across all the categories. What does it mean? The weekly is showing bearishness. Thursday, the last trading day, is showing bullishness. What is my preference going into next week? My preference is Monday to be bearish. What will that mean? That will mean in an overall downtrend, there was an up move on Thursday, and then I am expecting, or I am wanting, wishing almost, for the market to tilt down, so I will be able to catch the swing high in terms of aggregate technical breadth. That's how I anticipate a market move. Get ready with some stocks to trade in that direction and actually execute the trade if it is playing out in that manner. So I may get ready with some stocks to short. But if the market continues to go up, I will not execute them. On the long side, I am not willing to look for trades right now for the different reasons I explained so far. If that is the case, I could look for some short candidates, but before that, let's look at some of the analysis I shared publicly before knowing how they would turn out, as I always tend to do, other than sharing real-time intraday charts. Now you will see not only the Q techniques in play, but also how they help to enter, exit, and equally importantly manage a trade. There are unambiguous approaches using Q systems, and we'll observe that when I go through these examples. On mobile, sorry, not on mobile, on semiconductor, the ticker is on. And if I remember correctly, I shared this analysis on my website. If you go to my website, superiorprofit.co, in the forum, I share 360 degrees trade analysis before knowing the results. 360 degrees means I look at different angles, not just a technical chart, but look at different angles. And on March 27th, I shared a post, detailed post on ON with the headline, you could find this short setup in real time today. And let's look back at the real time snapshots as of that time. What did I see? Why did I not mind taking a short trade in this stock. The semiconductor as an industry was one of the weakest, and it was one of the most decelerating industries that day. It was down that day, and I'm carrying out this analysis in real time at 11:34 a.m. Eastern Standard Time in the morning session, well before the market close at 4 p.m. I saw this stock, it was consistently going down over 10-day period to 5-day to 2-day to 1 day to that day in real time. Yes, its valuation was nice, but I saw and I pointed to that in the graphs that both revenue as well as earnings, they were sharply coming down in terms of revenue growth, year on year quarterly revenue growth, year on year quarterly earnings growth, they were sharply coming down. And if those growths are coming down so sharply as I see in these two graphs, that's a valid reason to look for short setup. And we see that 76% of peer stocks were down on that day. How was the technical chart? It was breaking down in both weekly and daily charts. Now I am not a big fond of breakout trades because the stop loss tends to be far away. But sometimes I do trade them, and I explained in this case with the markings that it did hit jump thrust high, usually an unsustainable up move. Then it showed that cluster of indecisions at the top, moved sideways inside the triangle for a while, and it was breaking down. So it was looking bearish enough in terms of industry scorecard, in terms of fundamentals, in terms of technicals. But again, I am not big fond of taking breakout trades. So how could I trade it? If I wanted to trade it, my preferred approach is not to use stocks in this case, to use options verticals. In that way, stop being a little bit far in terms of stock trading would not matter. I could hold on to the vertical trade until my profit target is hit. I will not need to get stopped out. This was then. This was on this day the breakout happened, and I could identify during the daytime in the morning session I did take a short trade using options as I mentioned. Now it did try to go out, but notice at the time of taking the trade I already knew that there were many trend line resistances. Those actually were not breached. It tried to go up but made a lower high, came down again. So whether you traded it with a stock or with an options vertical, you are in a small profit in the trade. Using option vertical, if you are using short call verticals, your profit will be more in terms of percentage because of the time decay. But it would not get stopped out even if you traded with stocks. But as I mentioned, for breakout trades, I am not very fond of using stocks because of the stop being far away. This is what I mentioned earlier, that Q systems does not only help with taking a trade based on breakout, but also helps us manage the stops in a meaningful way. And in this case, the stop would not be just above the breakout candle, it would be above the trend line resistance that was never breached. And in any case, the preferred instrument would be using verticals, so stop would not be required. So this trade is in a small profit by now. Another stock in the same semiconductor industry that I shared, I think on Twitter, right on this day, and see the way I am using trend lines. Sometimes I am using them as breakdowns, Sometimes I'm using them as reversal points. Here I'm using them as reversal point. Micron, MU, another semiconductor stock, came to the daily trend line resistance and weekly trend line resistance. You could short it right on this day, not using daily interval. There was no Q short setup using daily interval, but you could short it using the intraday fine-tune chart. And that is what I shared publicly. And what would be preferred trading instrument again? That is answered by the question, is it a trend following or trend reversal? It's a trend reversal trade, kind of bounce short setup, but initiated using intraday time frame real-time charts. For reversal trade setups, the preferred instrument for me, Q guidelines, is the same, is to use options vertical, so we don't get whipsawed by a sudden move. That options vertical is in a large profit by now. So 2 out of 2 trade ideas I shared worked out, and interestingly both of them were in the bearish direction. See how many people were bullish, if not all that I know of, but I shared bearish ideas and they were not only technical ideas, they are looking at technicals, industries, scorecard and fundamentals. They worked out. Yet another stock I shared on my forum. Let's go back to the forum. That was the last idea that I posted. Let's look at the post. I said for DHI, this is the kind of stock I avoid buying even in a bullish market, because most people were bullish. I didn't say I was going to short because the market was not bearish at that time, but the stock itself had enough characteristics that allowed me to confidently declare publicly that this is the kind of stock I avoid buying. What did I see at that time? Let's look at the analysis at that time, real time analysis. Once again, the industry was weakening, and I'm carrying out this analysis in real time, noon Eastern time on 30th March. Home building industry was weakening rapidly after being one of the strongest for a very long time, and it was also decelerating rapidly. The industry itself was still up, so the scorecard, it shows it is a relative scorecard. The industry was still up, but it was rapidly decelerating. Deceleration can be a reason to look for shorting candidates, and I saw this stock DHI. It was down on that day, overvalued stock with negative earnings growth, with rapidly deteriorating earnings growth year over year quarterly earnings growth, and rapidly deteriorating revenue growth as well. Those were enough reasons not to buy. And then I looked at the chart. I didn't tell I wanted to short it, unlike ON, on semiconductors. Why? Because though it broke below one trend line support, there were other trend line supports in both weekly and daily. So I was not willing to publicly share it as a short idea. The same principle applies. I am not willing to buy if a trend line resistance is close by. I am not willing to short if a trend line support is close by. Once again, you see the pattern playing out nicely, shown by Q unambiguous indicators. It hit jump thrust high at price extreme high, an unsustainable up move. Then all of a sudden came big move down 3, but by that time price was already below swing high by a significant amount, so I could not short at that time. It tried to go up, created a lower high with a cluster of bearish indecision signals, and it was tilting down. I did not publicly share it as a short idea only because it had trend line supports nearby, but it was a clear case of where I would not like to buy. However bullish the market was, not this stock. In fact, none of the recent trade ideas I shared were bullish, as I mentioned, other than a Tesla breakout trade. How is DHI today? It has not gone anywhere, moving sideways. So the analysis that told me not to buy was a good idea. I didn't share it as a short. That's also a turned out to be a good idea because the weekly support is still holding. It's inside a box. If this yellow direction line is breached, it will break out of the box, and that may be a point to short the stock. But again, I am personally not very fond of breakout trades, so even if it breaks out, if I want to trade it, I will probably trade it using options verticals. I will not like to trade it with stocks because the stop will be far away. So this analysis also worked out. Tesla is an interesting situation. I shared it as a breakout trade initially that gave a large profit, but see what I discussed in the previous market recap. The video is of course on the YouTube channel. This was the closing of 1 week ago. And in the previous market recap, I explained why I was not going to buy Tesla at that time. However positive the news might be. What could be the positive news? That Elon Musk, the Tesla CEO, majority holder of the company, and probably the richest person in the world, requested a meeting with the Chinese premier during his visit to China. That could be a positive news. There could be other positive news. But however positive news could be there, like USA government rolling out new policies for electrical vehicles, that may be coming next week. But the trendline resistances, they give clear guidelines to Q traders like me and others. We would not buy, and that turned out to be a very profitable or loss avoiding idea. It came down sharply. There is a trend line support that is still holding in weekly. If that trend line is broken, then if you are holding Tesla stocks, you may be cautious. Earnings is coming, earnings season is coming. Tesla's earnings is also coming in April, around mid-April. You can check the date using QVital. If the trend line support in weekly is broken, you may be careful about holding the Tesla stock going into the earnings. No bearish setup, and I'm not going to buy now. Now, prior to that, I discussed a few banking stocks when the banks were coming down heavily after the Silicon Valley Bank closure and few other banks closure in the USA. And I first noted Hope, HOPE, this bank when it displayed the bullish headwind. I discussed this stock in that weekend market recap. Right at that time, I think it displayed the bullish headwind, but there was no bullish headwind trade setup if I applied the unambiguous checklist. And based on that, I mentioned in that market recap that I was not going to buy. I would keep an eye on the stock. And that was very useful loss avoiding analysis because it did not go up and it has not given any of the Q buy setups till today. What I observed now that 1 day earlier it gave a bullish indecision at the bottom, then it displayed a bullish headwind again, displayed a bull release as well on Thursday, but the candle shape on Thursday, last trading day of the week, is indecisive. And though the bullish headwind came once again, if I applied the checklist conditions, there is no bullish headwind long trade setup. So my conclusion on a stock like Hope is that it is not ready to be bought. I would like to buy with a proper Q trade setup that is not there yet, but the bullish headwinds at the same price level, they are telling me to continue to keep an eye on the stock for a bullish setup which has not come yet. That was a look at the 5 stocks: ONMU, DHI, TSLA, Tesla, and Hope that I shared publicly. They all, in this case, it happens to be they all followed the analysis that I expected, and we could not only make the trading decision or make the not to trade decision effectively, we could also manage the trades effectively using Q signals and techniques. Now, my view on the market is I'm not going to buy to overbought two near trendline resistances for market ETFs, and the sector analysis is telling that I may look for some short setups. In which sectors? Let's go back. The non-defensive sectors that were down over 1 day, 2 day periods. Which are they? Let's look at 1 day period. Let's look at last 3. Energy, infotech, consumer discretionary. But I'd like to keep energy out of the search for now. May be volatile based on news coming from OPEC countries or from the war in Ukraine. Let's focus on infotech and consumer discretionary. Consumer discretionary is even more interesting. See how I am narrowing down step by step. Why I say it is even more interesting in terms of looking for short candidates is because it is one of the worst performers, bottom 20% on Thursday, and also it is showing heavy deceleration over 2 day period. So why don't we just look as consumer discretionary? But I would not like to just look at S&P 1500 stocks. Let me look at the liquid stocks, all liquid stocks. Let me create a scorecard of all liquid stocks using QVital. Then I would like to drill down into those liquid stocks from consumer discretionary. But is consumer discretionary enough? No. I have the ability to drill down to the industries in consumer discretionary and see which are the weakest, bottom 20%. These are the weakest. So I'd like to only drill down into the weakest industries in one of the weakest sectors. That will be from home furnishing to home building. Interesting, isn't it? Home building is right at the bottom, and my analysis on DHI, not to buy the stock, turning out to be a good decision because home building is right at the bottom in this list. Okay, let's go to QVital to see if the scorecard is generated. Yes, it is generated. Notice something. There's so much information and insight in these systems. When I look at all the liquid stocks in the USA, 55% were up on Thursday last trading day, 44% were down, 55% were up. So mostly up. But what I am doing now, I am drilling down from the worst performing sector, one of the worst performer sectors, to the worst performing industries and looking at stocks in those industries only and see now what happened. Only 17% are up, 82% are down. That is why I say this 360 degrees approach can be top down like I am conducting now, could be bottom up, but 360 degrees approach where I am looking for short candidates not only from the market but from the weak sectors, from the weakest industries, that is much more higher probability in terms of trading success. See the percentage of stocks that went up, only 70% in this 17% in this industry stocks, liquid stocks, whereas for all liquid stocks it was majority bullish, but now I see majority bearishness. That's good, isn't it? Now I'm going to look for, let's see, 3-star bearish candidates. 3-star meaning both in terms of valuation they are overvalued, and in terms of earnings growth they are high negative earnings growth. And I see some of them went down, but not many. So let me relax the criteria a bit. On the bearish side, click 1 star. That will give me the stocks that are either now, not and, either overvalued or with negative earnings growth in the last quarter. Now I see many more stocks that went down on Thursday. Let's highlight the stocks that went down and check from Q Finder if there is any valid short setup. And I see these stocks came up with a potential short setup. Potential short setup. Let's look at some of them. Let's look at Levi Strauss, LEVI. What can I see? I can see it has a possible box setup to be confirmed from the chart, breakout setup, gap down move with bullish, sorry, not bullish, down move with pressure, bearish pressure, and it is in the mid price range. Let's look at the stock. Yes, it was moving inside a range, but it came down very sharply from the upper edge. We didn't have an opportunity to short it at the upper edge of the range created by trendline resistance support. Fell sharply. Yes, it has a breakdown setup, but not one that I would like to take because of the sharp drop from the recent swing high. How could we use the Q system? See once again, just like in case of Tesla, however bullish people were 1 week ago on Friday, looking at the price stopping right near or at trendline resistances with cluster of bearish indecisions, we would not buy. That would have been a very profitable decision. So let's close it now. Now the stop is too far to consider shorting. Let's look at the next stock, HBI. What can I see? It is already at price extreme low. Okay, so I don't want to look at it right now. Let's look at the next stock first, DHI. Okay, DHI is a stock that I already shared on my website, a stock that I would not like to buy. I already looked at it, so you may go through the analysis again. Let me skip that. Let's look at the next stock, WHR, Whirlpool. At price extreme low, has a bearish flow setup. Let's look at it. It's a consumer discretionary stock. Of course, we are looking at consumer discretionary stocks and the stocks in the weakest industries of consumer discretionary. This is giving a possible flow setup short side. Let's look at it using QL8 WHR. This is giving a possible short setup. If we applied the unambiguous checklists, we have a flow short setup in WHR, and this could be traded using stocks or options, both in my view. We have large enough reward risk ratio to take the trade. For a flow short setup, the initial target could be the lower boundary or once the risk distance is covered. In this case, the stop will be just above the trend line resistance. The weekly daily together is allowing me to take a short trade. In fact, if I did this analysis, 360 degrees analysis, just before the market close on Thursday, I would be okay to take a short trade in WHR. Do I know, would I know that this trade would make profit, will make profit? No, I will never know that, but it's giving an attractive reward risk ratio and 360 degrees short trading idea. Okay, let's look at few more stocks. What I am doing again, I am going through the complete market analysis, deciding not to buy. I prefer to short if the market starts to come down and I am seeing that non-defensive sectors are weak. I'm looking at the weakest industries in those non-defensive sectors, consumer discretionary to be specific. I'm looking for weak fundamental stocks with low risk short point. Let's close this stock. Let's look at few more stocks. I know we are beyond 1 hour point. Maybe we'll stop after looking at 3 more stocks. Those are HRB, HR Block, SHOO, Stephen Madden, and WGO, Winnebago. Two of them have possible flow short setup. SHOO has a possible breakdown short setup. All of them are at price extreme middle. Okay, let's look at their charts. WGO, I would not like to short, though it has a bearish flow. It is right in the middle of a range, no trading area. I'm applying all the Q concepts together to find the highest probability trade. So I don't buy in the middle of a range or short in the middle of the range. So I'm excluding WGO. Next, SHOO. Yes, it has a breakdown, but it has other trend line support nearby, multiple of them. So again, I am applying all the Q concepts, excluding this as a breakout trade. I would like to not take it. Then last one, HRB. This one is looking more promising. It is looking more like Whirlpool, the one that we identified as a possible short setup. Let's look at HRB using weekly daily charts. Here, if I apply the checklist for the flow setup, the weekly is not meeting the checklist condition. So I will avoid considering a short in HRBC. The checklists are unambiguous. Checklists are a list of Q indicators that we have to check this way, this color or this shape. Usually color only. Only candle shape is considered one condition sometimes. Mostly using color. And the color checklist is telling the weekly is not allowing me to have a flow short setup. So I am now left with only one possible candidate, that was WHR, Whirlpool, that is giving a proper short setup. I could have didn't take it, but I was sleeping at the closing hours on Thursday, but I could short it if I found it on Thursday, the last trading day. Now let's now go back and look at the one page fundamentals of WHR. There are other stocks, of course. You could carry out the same analysis on your own computer, get ready with a few more shorting candidates. Maybe you could expand from consumer discretionary to some of the other weaker sectors like industrials, energy, etc. as well. I will not do that, but I would like to go back to WHR's one-page scorecard, and instantly you see so many red colors are popping up, red magenta colors in QVital. It's still retrieving data on the PR stocks. Give it a few more seconds. Done. What is it telling us? The valuation is okay. However, it has large negative earnings growth that allows us to short, and for last 3 quarters earnings growth is continuing to come down. Also, the revenue growth is continuing to come down. Those are enough reasons to short. Steadily going down over 5-day, 2-day, 1-day, but 10-day is slightly up. That is good. It tried to go up and then decline. That's how we have a flow trend following short setup. And this is something I look at when I'm shorting or buying. For shorting, I'd like the color to be magenta. Funds are not accumulating. That's also a reason I would like to short. 50% of PR stocks went down, and if I look at the industry scorecard now, industry graph first, household appliances score came down. The industry is steadily going down, and if I see the relative score over longer period, this is very weak industry. Interestingly, this is weak industry, and that is why if I again go back to the stock chart, and I saw that in Finder also, this is a stock at price extreme low. But price extreme low does not mean the stock cannot go down more. That is the difference between the price extreme indicator and the jump thrust indicator. If the jump thrust indicator hits extreme low, which it has not, which would come as red dots, magenta dots here. If the jump thrust hits extreme low, I don't want to short. But at price extreme low, we can continue to short. That is the difference between these two extension indicators. Price extreme is also extension indicator. Red means extended to the downside, but jump thrust is extension with intensity, which shows the extension is unsustainable. But we don't have that unsustainable down move in terms of jump thrust, so I am okay to short even if the stock is at price extreme low. You can see at price extreme low it is continuing to go down, but jump thrust low I would not like to short. That is not the case. So Whirlpool, looking at industry fundamentals, technicals, is giving us a short setup. Market is not bearish, but this stock is still looking very bearish. That's how you find shorting candidates and take them at a low risk entry point. You may look at other stocks on your own, get ready with short candidates. I don't see any reason to look for buy candidates right now. Does not mean market cannot go up, just that I don't see the lower risk opportunities on the buy side right now, and I like to manage my risk first before trying to calculate my reward. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Most likely next weekend. I will announce the date and time on Twitter as usual. Have a great weekend, and as these live examples show, as the reviews of my posts earlier, tweets earlier, over and over again in this session show, and you could do the same analysis on your own as well. What do they show? They show that if we followed a disciplined approach and manage our risk using robust systems, robust data source, there is no reason not to trade profitably, and I hope you continue to do that or start doing that if you did not do that earlier. With that, let's end today's session. See you again. Thank you.